Joining me now is Garcia-Amaya, CEO at Zoe Financial. So break this down for us, because it feels like we've already done a lot of CapEx spending as it pertains to AI. You think it could be higher than the 90s. What about higher than what we've already seen so far?
Yeah, so there's a couple analogies you can make to the late 90s to the infrastructure boom that led to the internet boom. The first one being that you need to kind of lay the rails for then the application layer to take off. We haven't even seen the application layer yet of AI. A lot of it is just setting kind of the rails. But
the analogy would be like the telecom, like the fiber optic cables.
Yeah, like that's
that predated the internet boom of the 90s.
Exactly, and we're starting there now, but we haven't seen, like in the late 90s, it was the application boom where everything that had a .com was up 300% that year. It's very concentrated on who's up right now, right, when it comes to the AI boom, and it tends to be very profitable companies. These companies are spitting out cash flow. That's the first thing. The second one is these companies are the ones that are driving the investment, and for that reason, they're not relying on leverage to build the rails, right? So part of any boom that goes bust is when you have too much leverage that ends up in tears. We're nowhere near that stage of the story of leverage leading the laying of the rails.
They have been opting for private credit and have been taking some leverage to kind of meet the CapEx demand. And then in terms of just the application layer, to use your analogy, a lot of the companies that are in that kind of phase are still private now, whereas in the .com era, they went public much quicker. So given kind of the dynamic of maybe private credit relative to traditional lending that we saw back in the 90s, and also just the private nature of the application side of things, how do you see all of that kind of shaking out vis-a-vis the historical analogy that you used?
So to a certain extent, even though they're using private credit, they have over $400 billion in cash, right? If you look at the large companies. So to a certain extent, they're using credit lines, but they're not necessarily exhausting their current operating cash flows. That's one. The other one that I think is really important here is that we haven't really seen the brunt out, for instance, of the IPO market. You mentioned a lot of companies are staying private longer, and that is definitely true. But there are companies that are starting to open the gates, starting to see results in the sense of pops on IPOs. And I think that's only in the early stages of drawing in some of the private companies to become public. Hence, maybe why it's not the first inning, but it's maybe the middle innings.
How patient do you think investors need to be at this stage? Because I think another reason why we've seen this revaluation of the AI trade is, in addition to kind of the concentration fears and the valuation fears, is just this notion, they had ChatGPT 5 that may have underwhelmed in certain categories, the competition from China that seems to be ramping up. So how do you kind of square all of that together, given where we are in the inning of this just mega trend that we've been seeing?
Yeah, I mean, the analogy is the browser wars predated the application layer, meaning was Netscape was going to be the gate to the internet. And I feel like ChatGPT is that right now. Right? But we haven't even seen the next evolution of this, which is how are non-technology companies going to use AI to get significantly more productivity, which would end up in earnings. So hence, if we see a broadening of this, of AI, just the builders of AI to the users of AI as corporations, that could be the next leg of where this is going.
Right. I think McKinsey had a study showing so far zero ROI in terms of the spending leading to efficiencies from the technology. At what point do you see that changing? Is this a 2026 phenomenon? Is this something that is years away from really demonstrably altering the way that corporations and corporate America uses this technology?
Yeah, the timeline is always hard to forecast if it's next quarter or next year or 3 years out. And hence why I bring up the leverage component. As long as they're not off their skids when it comes to leverage, this could go on for a while, because I do believe that this technology is transformative. It's just very hard to predict when it will happen and which sectors will be affected first.
Yeah.